Thank you all for being here. Wow. It's been, last week was rough, but this week is turning out great. In fact, the last 3 days, I think, 3.5 days, Bitcoin went up nearly 7,000 points. That's 36%. And I always talk about being on the train for those very special days. Well, we just had a couple of them. And I know Bitcoin's taking a little bit of a breather. It looks like it's kind of ramping up a little bit again. And we're going to analyze all the stuff going on. So first of all, thank you all for being here. I see all the usuals. Thank you, TNT Tesla, for keeping us all safe. And K8 in the chat as well. So let's go. This one is called the Bitcoin Flight to Safety, or the Flight to Bitcoin, whatever you want to call it, debating with the channel. But you get the idea. And I reiterated on DCA yesterday, I got calls from people that hated Bitcoin, didn't believe in it, saying, how do I get my money off First Republic into Bitcoin on a Sunday? It was hilarious. Anyway, disclaimer, this is not financial advice, edutainment. We're going to start with the good news today. I'm going to go real fast because we got 50 slides, 50 nuggets to get through, so you will learn a lot. Please hit the like. I really appreciate it. It helps get the message out there, get the excitement out there as well. So let's just jump into the good news. First of all, Bitcoin did smash 26,000. It hit a 275-day high, basically going back to June 2022. And that is quite remarkable. It actually went as high as 26,500 today. And everybody's saying, whoa, what's going on? Is it the Jim Cramer effect? He said, everybody should not touch Bitcoin, everybody should sell it. And of course, it skyrockets live the instant he said it. Anecdotally as well, I don't watch CNBC, but I thought that was interesting. Let's look at the last 7 days. Divided by Bitcoin, you can see here quite a bit of green. A little bit of red around the stablecoins like USDC and DAI, but quite a bit of green. In fact, Ethereum outperformed Bitcoin by 9.35% over the last 7 days. Remember, Ethereum 7 days ago was kind of sluggish. So you got to remember, we're looking at a 1 week period here. Let's look at the dollar return. Of course, from a dollar perspective, Bitcoin wins up 15.31% in a week. Remember, it was a volatile week. I got out, I got in. It was a lot of weird stuff going on. But that's how it is sometimes. It is a very rocky ride. And that's why I say, wear your seatbelts. So let's go to some of the fun news. This is a wallet that I will be keeping my eye on. So CZ, we knew since Sunday or Monday, I think Sunday night, he said he has $1 billion worth of BUSD to burn. Obviously, we all know what's happening with BUSD, covered it here a few times, but if you look at his wallet, there's the CZ wallet, or some people call it Binance 14. And thank you to Sanjay for sharing with me right before I went on. You can see here they have $973 million ready to go. And CZ will be spending that on Bitcoin, Ethereum, and BNB token. I wonder what the ratios are. We'll be tracking that very carefully here. So fun to watch. Let's talk about the last 7 days as well. Another kind of recap. Look at the gainers. Aptos number one. Over the last 7 days, 285% is on the roll again. Bitcoin 285% year to date, 59% year to date for Bitcoin, which is huge. Stacks 320%, the layer 2 on top of Bitcoin. And the losers, EOS, ApeCoin, and Algorand. We'll talk a bit more about ApeCoin later too. Not a lot of news, but interesting to look at. I will also analyze a lot of the top layer 1s and layer 2s from a DAU perspective. See if you guys want an update there. So let's talk about what happened over the weekend. Remember, I talked about the Sunday situation where people are saying, how do I get me some of that biddy? Well, this shows you that the bank runs drive Bitcoin adoption. 1 million new Bitcoin addresses were generated this weekend. That has never happened in all the time I've been looking at Bitcoin and on-chain. 1 million new Bitcoin addresses. It's funny because I do have an indicator that looks at the average wallet balance. It's gone down because the addresses have gone up. So it's interesting. More adoption is great because we love MktCap's law here on the channel. This is from Will Clemente. Hat tip to Sanjay for getting to me again right before I started streaming. You can see here, I see people in the audience there saying, please, more bank failures. It's a funny thing to wish for. But yeah, the world is changing fast. But here from Will Clemente, 73% of Bitcoin is now held by long-term holders. And, a lot of people say, huddle, rip it from my cold dead hands. But this 3/4 pretty much of holders are playing the long game. They're not trading in now. They're stacking it, and there's so little left. The supply crunch that our friend Jamie from Bloomberg said could hit by year end looks like it has a better probability than a month or two ago. Let's talk about a bit of Confluence. First big chart of the day, courtesy of Glassnode. And I just love it. So I was actually watching what they call the pi, one of the pi cycle averages, the 111-day simple moving average. And the way it actually had perfect confluence with the 200-day simple moving average. If you look to the bottom right corner of the chart, you'll see the purple and the teal line. I'm probably half colorblind. God knows if those colors are right. But the purpley one is the 111-day simple moving average, and the green is the 200-day. They hit together at a perfect point of confluence. And guess what bounced off that point of confluence? The Bitcoin price. And then it shot up to 26.5. So that was one hell of a bounce over the last 3.5 days, which is stunning. And Bitcoin is, again, it's trading between these several popular levels. There was the former resistance, which is a 200-week. It smashed today. And then the 365-day simple moving average. All of this stuff is kind of all there. The 200-week was broken for the first time as well since August 2022. So all in all, from a technical perspective, this is interesting. And remember, once you get above that 200-week, then it becomes support, which is very important too. So that'll become the new dipping down layer. And actually, you should check on the price right now, see what's happening. 24.7 on Bitcoin. So it's just under the 25. 25.2 is the 200-week moving average number. So remember that 25.2. I was always saying 25.2, 25.5 would kind of be that resistance level. It's great to break through it, but that was probably one hell of a short squeeze as well. A lot of shorts got liquidated. So let's look at some more charts. Let's look at the supply crunch stuff, again from Glassnode. You can see here the crazy ETH and Bitcoin drainage from exchanges. And a lot of this happened just over the weekend as news of Silicon Valley Bank and other bank failures hit. Investors sought safety. They sought refuge in Bitcoin and ETH. They bought and they took it off the exchanges real quick. So they are getting smarter and smarter and better every single day. Notable outflows occurring across all of the major exchanges. And that was pretty stunning. And the last time we saw such a huge dip was actually during the FTX collapse back in November. So remember, we're not out of the woods. There's more shoes to drop. We don't know if they're going to be banks. We're going to know if there's Operation Choke Point, if there's more FUD coming out. So be careful. Get online, do your business, grab your stuff, stick it in a wallet, and wait. You need to trade it, stick it back on the exchange, trade it, get off. That's how it works, okay? Now let's talk about Bitcoin dominance. A lot of people are very excited about the Bitcoin dominance. Look at this. We are bright bang in the middle between my roof and my floor, which has not changed in years. And the roof is about 50%, 49%, and the floor is 39%. We did dip below the floor back in September 2022, but that was the first time in a very long time. So we're right bang in the middle of that range. And typically, we'll see exactly what happens next. Are we back in Bitcoin season? And the answer is pretty much yes. We are at a score of 27 versus Bitcoin season, which is 25. We're just coming out of it. Again, you're seeing a little bit more strength in some of the other tokens that are catching up. And that's what typically happens. Bitcoin runs and then the rest follow. Bitcoin typically leads the pack, although that was a little bit different at the beginning of the year where you had alts on a rampage. This is the list of these over the last 90 days. A quick reminder, you see the black piece, that's Bitcoin, and I have the big arrow in the middle pointing to it. It is going up the charts. If you looked at this 2 weeks ago, Bitcoin was in the just under 50 percentile of these top 50 alts, excluding stablecoins, and the performance of them over the last 90 days. You can see a lot of the hot stuff to the left of Bitcoin. You've got Solana, Mana, Filecoin, Synthetics, Phantom, RPL, don't know what that is, Graph, of course, GP, Optimism, sorry, not GP, Lido, etc., all the way up, Aptos and Stacks winning the day. Nice to see a Bitcoin play up there. And then down to the right, you've got the old layer ones still not moving. And it's nice to see Dogecoin, the worst of them all. So hopefully the luster will come off those meme coins. Again, I know people get so upset when I say that, but if you buy something, you have to have utility. It shouldn't just be a joke, because it has no long-term lasting value, in my opinion, unless, of course, somebody makes it real famous again. So let's talk about another correlation that's fascinating. This is the Bitcoin and the 2-year Treasury. So obviously the Fed follows the 2-year Treasury rates closely, and we saw a historical dip just yesterday. And based on this, many expect, including myself, that the Fed will pause any further rate hikes real soon. Maybe as next as the next FOMC meeting. And look at this chart here. You'll see how the negative divergence in the RSI preceded the top in rates before the top in 2018. Remember, history doesn't necessarily repeat, but it often rhymes. So if you go back to 2018, you can see where the US 2-year top was and where the Bitcoin bottom was. Very, very important. And here we are again. So can it repeat? We had the US 2-year top and the Bitcoin bottom, literally almost perfectly the same. And if you look at the RSI down below, you will see the same type of divergence. Again, it is a picture perfect chart of how macro ties into Bitcoin and how Bitcoin somehow sniffs out pivots, it sniffs out quantitative easing, and I don't know how it does it. Maybe people look at these charts. I don't know. It's fascinating. Let's talk about the option skew last week. Last week I shared this chart, this exact chart. And people are like, oh, not going to happen, huge bets. But this, I said last week, everybody's betting on the 25 to 30,000 Bitcoin. And at the time, Bitcoin was like $20,000. People said it was hopium. And I said, no, follow the big trades. And look where we are now. This is the new option skew for May. It's still deeply bullish, but the difference is people are now placing bets beyond 30,000. It's gone up to 32,000 and $40,000 strikes. Big chunks, those two big green candles are the 32 and 40,000 strike call option buys. Now, the put call ratio is a little bit different. It's gone up higher. Last week, I think it was 0.44. This week, it's 0.78, which means people are buying more puts, but that's what they typically do to lock in. And those puts that were bought mostly were at the 20,000 range. This is the insurance they're buying on the left-hand side, just to make sure they can take their gains home. And I do the same thing all the time as well. So let's talk a little bit about some of the macro stuff about how I believe there could be more shoes to drop. Well, Moody's, the guys that actually triggered the Silicon Valley Bank liquidation, Moody's cuts outlook on the US banking system to negative, citing rapidly deteriorating operating environment. That, I have to repeat that again, rapidly deteriorating operating environment, despite regulators and presidents' best efforts to shore up the industry. This is scary. This is why Bitcoin exists. This is why Satoshi built it. He, she, them, or whatever the team was behind it. And, political leaders come out and say, everything's fine. We got this. No, it's beyond not fine. Even Moody's agree. So let's go. But despite that, the banks did bounce back today in the markets. You can see ones that we were very concerned about. First Republic Bank jumped 55%, PacWest 51%, Western Alliance 45%. But again, these things can sometimes be dead cat bounces, but things like First Republic, I had a look, near and dear to my heart. They're okay. They're going to make it. But there could be others that may have some problems. Now, let's talk about the problem with the banks. And I'll get back to crypto in a sec. A lot of really good crypto stuff coming. But we've got to talk about this because as the banking industry burns down, crypto goes up. This is why we care. Everything's related. So Silicon Valley Bank, clearly, this is the impact of unrealized security losses on capital ratios. They were carrying huge losses on their long-term 10-year bonds out to 2032, but they didn't notify anybody till it was too late. And Silicon Valley Bank had terrible hedging risk management on those hold-to-maturity securities. And many, many banks have this hold-to-maturity unrealized losses. We just don't know about them yet. And of course, I'm sure the regulators will figure it out eventually. But by that time, it's probably too late. But you can see from this chart here that Silicon Valley Bank was in a league of its own with extremely poor decision-making, a massive outlier. And those mistakes start in the Treasury function, all because of, you've heard it 1,000 times this week, asset liability mismatch, basic risk management. And the people think, oh, this is like the global financial crisis. Yes, it is in many ways, but that was driven by excessive lending and a bubblicious real estate market. Very different this time. It's happening on the Treasury side, caused by the Fed jacking rates too fast. And if anybody's thinking of starting a business, by the way, beginning with SI, like silver, silicon, signature, do not. Now, I don't know if it's one hell of a coincidence that each one of these three that blew up all had SIs. Haven't heard anybody talk about that, but I thought that was stunning. So again, if you're starting your business or thinking about rebranding your business, avoid the letter S altogether. So the question is, will banks touch crypto? This is why we care about banks, everybody. There are other big banks sniffing around to take up the slack that's been left by Silicon Valley Bank, by Signature, by Silvergate. So you have DCG, Digital Currency Group, that are in their own level of hot water. They've had positive responses. They're kind of floating maybe sales of some assets to Santander out of Spain, HSBC and Deutsche Bank. HSBC, by the way, snapped up the UK division of Silicon Valley Bank for only £1. That's about $1.10 or something. And BlackRock, JP Morgan, and Bank of America are also sniffing around for these fire sales. And I expect to see more of JP Morgan behind the scenes as they grab everything for pennies on the dollar. And that's typically how this all works. But we don't want a world where the top four money center banks control everything, because that's beyond centralized. Let's talk about stablecoins. Stablecoins no longer a safe harbor after the weekend we had. This because stablecoins typically are pegged with fiat currencies. When they lose their pegs, it destroys the whole reason for having them in the first place. And investors grew more risk averse from these stablecoins, and they started pumping their money into Bitcoin for safety. Okay, it's the irony of that is typically people move to stablecoins when they're worried about crypto safety. This time it's completely different, as can be seen here in the chart. So that was interesting. And looking at more stablecoin charts, this is the whole situation that played out over the last couple of weeks between BUSD kind of being shuttered slowly but surely. And also you can see the USDC, all the stuff that was hit because they had exposure to Silicon Valley Bank, and of course Silvergate and Signature, I think to some extent too. And you can see that the winner is Tether, USDT, adding $6.64 billion in market cap, whereas BUSD fell about $8.19 billion since the beginning of the year, and Circle got hit by about $5 billion. So that's a big hit, $13 billion. And again, that delta between the 6 and the 13 equals 7. $7 billion then went into crypto. And that's kind of what I'm talking about. That's why it's important to track all this stuff. Let's look at the roller coaster we had. Again, driven by fears of the USDC depeg and some other stablecoins like DAI that was holding things like stablecoin collateral. They fell too. In fact, they both fell. DAI fell to about 89 cents on the dollar. USDC fell as low as 88, depending on the exchange. Sometimes it was 85. And you can see here, I think Gemini's GUSD and Paxos USDP deviated slightly below their peg, but they held pretty strong. And of course, the winner is Tether. That had a premium on the actual amount because it was so sought after. And people have been talking about Tether blowing up for years and years and years, and all of a sudden it's more expensive than the peg. Fascinating times to be alive. In decoupling news, again, this is the last 90 days. Bitcoin versus the Nasdaq. Bitcoin's up 35.4%. Remember, it had a bit of a run back in December. And the Nasdaq's only up 5%. So that decoupling is still alive and well. And we like to see that as well. GBTC, the discount, literally went to 35% at one stage. Following the SEC hearing, when Grayscale has taken the SEC to court. And they won the first battle. But now the discount is wavering back to 38%. So not out of the woods, but still it's good. And there are still fears that there is still that potential. If you take the amount of 650,000 Bitcoin they have under management with that large discount, you're talking 220, 230,000 Bitcoin arbitrage in case of a successful ETF conversion. But some people believe that might be over-exaggerated right now. So watch this space carefully. I'm hoping one day it will get approved. But a lot of people are talking about some changes needed in some people that run certain departments like the SEC and the Fed and stuff. We'll see. Hopefully there will be some changes. Now let's talk about liquidity. Very important, because when there's a lot of liquidity in the system, number go up. Very important. So global liquidity has been retracing ever since late 2021. If you look on the chart, we just spiked up and it's been tanking ever since. This chart goes back to 2010 and you can see the fluctuations. Obviously, there was a lot of loss of liquidity 2016, 2017. Also, at the end of 2019, there was a tiny little crisis then too. Things dried up and then the money printer went burr. But look, it's happening again. And this is global liquidity. The last 4 months has been turning up as central banks from around the world step off the hawkish path. And the crunch of liquidity has come to an end. For now, we don't know if this chart will continue going up, but I think it will, especially given the situation in the world today. So getting back into more crypto news, there was a article that was shared with me. It was super interesting. And this was a guy, Chris Burniske. He's a former ARK analyst, ARK Invest. You guys may know them. Now he runs his own VC firm called Placeholder that invests in crypto assets. And he appeared on a podcast with ARK Invest and Royal Paul. He's been doing kind of the circuits to discuss valuation techniques of cryptocurrencies with a focus on Ethereum and Solana. And that got my interest because I've been doing that for years. And I was like, what does he see? And for his part, what's interesting is he looks at the entire crypto space against ETH, like all credit markets are against US Treasuries. I like that approach. And he also agreed that staking, the whole staking ETH situation is the risk minimized yield for the internet, much like the 10-year T-bill is for physical assets. And he added, as long as Ethereum maintains its dominance in the space, it will continue to be the benchmark for everything in the crypto industry. Very good. Furthermore, he did state that cryptocurrencies competing with Ethereum and Solana are less likely to succeed in terms of harnessing network effects. And he cited some things, there's some interesting technologies out there like Polkadot and Cosmos, but he doesn't see them taking over from a network effect perspective. And I'm like, whoa, interesting. And I always say it's all about adoption. Follow the users, think of it like a shopping mall, and the one that wins will become the black hole that sucks everything in. But let's look at another piece as well. Solana was in the news from a rag called Motley, which I think a lot of this stuff is not good. But this was interesting, and I know I've been told, I made a video exactly 13 months ago about Solana Pay. But they talk about, is Solana the next Square-style payment platform? And, they go into detail how credit cards take 3% of each transaction. Square is one of the cheapest ones at 2.6% plus 10-cent flat charge. And they believe Solana can lower it to one fraction of 1 penny and reduce the cost of money transfers dramatically. Settle on the blockchain, settle much faster. Funds get into merchants' pockets in 400 milliseconds. Better than any other option out there. So it's like, interesting. Or are they saying it's going to be a killer of Square? The old name was Jackal Block. Ticker Skew, SQ. So we'll see. So I decided for this quick video today, I would do a quick revisit of the market cap over daily transactions for the top chains and the market cap over daily active users. And this is the first chart you can see. Top of the list is Cardano market cap. They have about $204,000 in market cap for every daily transaction, which some people might sound pretty rich. I think it sounds very expensive. If you go down the list, and if you're out there, I'd love to talk to you about this one day and go through all the models and stuff. Solana is $381 versus Cardano, $204,000. That is quite a difference, ladies and gentlemen, per transaction. ETH number 2, Cosmos number 3, Aptos number 4, Binance number 5, etc. And then you get down the list to the phantoms, avalanches, and flows that are kind of at least relatively more reasonable. Now, I turned this into a log chart, so it's a little easier to read. Also in red is the market cap divided by daily active users. And it's pretty much, again, very, very low for Matic and Sol. They're the two winners on that ratio. But on the log chart, you can see how things kind of pan out. And Solana doesn't even exist on the long chart in terms of the market cap over daily transactions. So again, quick recap on where they are and why maybe Chris Burniske sees ETH and Sol as the winners of the next run. So interesting to watch. I'm glad to find somebody who is deep into this too and sees some things that I see. Tesla, very quick. This is flying around the internet. They did talk about it on Investor Day, but this is a nice chart. And it shows the average miles driven before an accident. Remember, we only have one life, ladies and gentlemen. And even if you survive a car accident, it can result in perpetual injuries, sore neck, sore backs, all sorts of stuff, brain damage, heaven forbid, scarring. But here, Tesla is 7.44 times safer than the average US driver when on autopilot. This is statistically proven. This is not fake. This is not marketing materials. This is from the NHTSA, which is fascinating. So again, it's just another aspect that people don't understand about this car company. They will one day. Now, switching gears to bad news. Yes, there is some bad news, ladies and gentlemen. Massive drainage last week. Remember, this is from CoinShares. This is a report as of the week closed 10th of March, 2023. And it was a rough week last week, but it changed radically this week. So I had to drink some white tea. It's the afternoon time. So digital asset products. So outflows for the fifth consecutive week totaling $255 million, $250 million, the largest single weekly outflow on record, representing over 1% of total assets under management. And again, that is massive, big hit. Let's look at the specific assets. Bitcoin, of course, was the largest. It saw a large weekly outflow of nearly $250,000. Ethereum, 11 million. Not bad. Year to date for Ethereum is pretty much flat, which is nice to see. And you had some money flowing into some multi-asset funds. Short Bitcoin fell. Wow. So that was good timing because you didn't want to be short Bitcoin over the weekend. Litecoin fell, Tron fell, Solana up 400,000, XRP up 300,000, and Polygon up 100,000. They were kind of all the notables. So there is still money. These funds are now deviating from the overall kind of market where Bitcoin is outperforming. But it'll be interesting to see this next week. And I imagine there will be huge inflows represented by what's happening. Now, the stock market, mostly red. Financial services got completely smashed over the last 7 days. But nice to see disruption up. Amazon up, Google up just about, Meta, Apple, Microsoft, Nvidia. Nvidia is a beast. Tesla down. It did get a little bit hit. But I can't read that number exactly. It's too small. 2% down for this last 7 days. Not too bad. But there was a great sniping opportunity. And I know many of you got it about 165, 167 yesterday. So stunning. Let's talk about the elephant in the room. This is the Fed hike. A week ago, it was like a 77% chance of 50 basis point hike. That's gone. Now it's a 77% chance of a 25 basis point hike and approximately 23% chance of no hike at all. It all depends on how they digest the information. But I think there's a lot of ego in this within the Fed, and they want to kind of pretend they're really strong and still in control, thinking that they control inflation, which they actually don't at all. They just destroy demand. Said it 1,000 times. But here, this will be interesting. I think they're probably going to do 25 basis points and then stop and then cut at the next crisis. And here you can see inflation over the last 2 or 3 years. And the trend is down. Now, I added a little red ticket there saying alarm because last time they measured CPI, it didn't fall as much. And it caught a lot of people off guard and they didn't like that. But thank goodness now the trend is down. And remember, they're looking at data that is 6 months old. So it'll be down around 4, 3.5, I think, pretty soon. Let's look at the supercore breakdown. This is the pieces that are part of the core, or they call the supercore, the core of the core inflation that the Fed really focuses on. And you can see here, things like water and sewer are up a little bit. Medicare has gotten cheaper. I don't know how that's possible. Transportation's up a little bit, probably airline tickets mostly. Recreation up as people continue to try go out if they can. Education, communication up a little bit, but that's just the super core. And a lot of people do believe the next will be that 25 basis points, and then they'll stop. So we'll see how that goes. Ugly news, everybody. I hate to do this every week, but it's important to be fair and balanced. So in unlocked news, these are the top unlocks from the new IA engine. Thanks to the team, DJ out there who helps put all this stuff together. You can see top of the list for these unlocks, Sweatcoin and Stepin. This is the kind of the move to earn type space. But boy, you do not want to be holding these tokens with this type of dumpage coming. Then number 3 on the list is Optimism. 4 is Blur. Then other names you might recognize. Uniswap is there. Decentraland is there. Moonbeam, Gelato, Euler, which got hacked and got wiped out completely. Illuvium, and all the usual stuff. Even Aave's at the very bottom of the list, but it's a minimal unlock. Another view of it is the big ones that are coming over the next 24 hours or so. You got DYDX, top of the list, and BitDAO. Euler, again, wiped clean after a hack. I don't even know why they're even unlocking. And then you got ApeCoin on there too. Stargate, Akala, 1inch, looks rare. It ain't rare, ladies and gentlemen. It may look rare, or the name may be looking rare, but it's not rare with this type of dumpage. And Immutable X and Yield Guild Games. Again, as we always said, from the very first time we analyzed all the metaverse stuff, they're all money grabs, so just be very careful. Let's talk about a little bit of wage growth for those who are earning wages and salaries. This is a interesting and a depressing chart all at the same time. And you hear like JP talking about controlling wage inflation. No. So if you look at this chart, anything that's red means real wage inflation. This is the inflation of your wage less the cost of living increase. And real hourly earnings fell 1.3% again for a record 23 consecutive months where people are earning less and less every single month. And that means just 2 months within the Biden's presidency have seen inflation-adjusted wage growth. Everyone other than that, the last 23 months, you are earning less and less in the United States. And probably, the UK, we're having 18, 20% inflation. I don't know anybody that's getting a 20% wage rise in the UK. And I've asked a few people, especially who work in the medical field. This is part of the whole situation with the Fed and everything that gets me very upset. So I'll move on. And a little bit of ugly news. AI is scary. And it's developing very fast. And why do I mention that? Well, a couple of reasons. One, these are all the top exams. And if you look at the performance on human benchmarks, it is rather remarkable. So GPT 3.5 is in blue. Then you have GPT-4 in green and GPT-4 no vision in light green. So if you look at how these things have performed, GPT 3.5 scored 10th percentile on the bar exam. GPT-4 hits the 90th percentile on the bar exam. Okay, the AI can now beat 90 out of 100 people to take the bar. And on BC Calculus, it got the equivalent of a 4, or good for college credit, at 99% of colleges. So the reason I'm sharing this is AI is developing very, very fast. And you have to have a skill that cannot be done by these machines. Just look at these exams. People spend 3-4 years studying for these things, and this will nail you. Another piece of bad news, ugly news, I should say, another massacre at Meta. This is the year of efficiency, according to Zuckerberg. He's going to lay off another 10,000 workers. And of course, every time he says that, the stock rallies. And that is not good. But the other point is these 10,000 jobs may go, and they had 5,000 job openings that are gone too. So you could imagine that's 15,000 jobs leaving the scene. Many of these jobs will be replaced by AI. And I don't say that AI specifically replaces the jobs, but AI makes people a lot more effective and efficient, meaning one person can do the work of 3 in the future. So again, pick a career, a job where you can outsmart the machine. Very important. Creativity is critical. So with that, everybody, thank you for that. Sorry it was a long show. Exciting time. Bitcoin 24.5, and I've got to get above 25.2 to get there. So thank you for nearly 3,000 people being here, and let's make 1,000 likes before we hang up. Thank you all. I'll see you all later, and thanks to the mods in the chat.